What's up, everybody? Welcome to Solana Weekly. This is your host, Thomas, and I want to thank you for joining in. Let's take a dive into the latest trends, use cases, and people behind the incredible growth of the Solana ecosystem. None of this is financial advice, but I'm hoping that all of this is alpha. Now let's get to the show. As we wrap up 2024, there's one topic that affects every crypto trader and investor, and that's taxes. Today, we are diving deep with Matt from Crypto Tax Made Easy, who has helped countless traders, including myself, navigate the complex world of crypto taxation. He's coming to us all the way from Australia. Welcome to the show, Matt. How you doing?
I'm great. Thanks for having me, Thomas.
Oh, thanks for coming on. I feel like this is the perfect time to have you on. The year's winding down. I'm seeing advice all over Twitter. No one really knows what to do. So I feel like we need somebody to come in here, tell us, what crypto taxes are about, why we have them, and, just like some general good advice for, even somebody just getting started, getting into the space. I feel like you got to know what's going on, right?
Definitely. Yeah, it's something that affects pretty much everybody except for any Habibis in Dubai who might be listening and saying, just move here.
Yeah, that would be the dream. That would be the dream. That or like the Bitcoiners that just hold. I feel like they had it right. It's just buy and hold. Then you don't have to really deal with any of the taxes. But that's not what the space is currently, especially when we're talking about Solana with fast, quick, cheap, easy transactions, right? As I try to limit my transactions, I can't do it. It's unstoppable at this point.
Yeah, it's hard, man. I've been racking up the transactions with DLMM recently.
Yeah.
And I'm not looking forward to doing my own crypto tax, but it's the price I pay.
Yeah. No, it definitely is. And, we've got to go over, I try to bring up, what's been going on in the space. And today we did see like a pretty big wipe of, across the whole market. And then you put out this amazing Twitter thread about how to deal with liquidations, like from a tax perspective. I was howling laughing at that. It was too soon. It was too soon, but it was really good.
Thanks. Yeah, I always try to kind of newsjack, if you will, when it comes to the threads. Sometimes the news just gives you the perfect topic to give the unique take of how it might impact your tax situation.
Oh yeah, no, I feel like that was like, I didn't personally get liquidated, but I saw, $1.5 billion was wiped in liquidations across the market. So, people definitely got hit hard. So, it is good for them to keep in mind the tax side of that as well while they do that. Maybe not get too aped out on the leverage.
Yeah, amen.
Sounds good. Yeah, so. Why don't we just kind of start with how you kind of got into, crypto tax consulting? I guess that we could start with where I reached out. I think it was 2022, and I was, I hadn't really cashed any crypto out up until that point. And I was like, hey, I don't even know what to do. I ran, a couple of my wallets through a couple services, and I was like, all these numbers are different. Nothing looks good. Like, I'm in a world of pain. I only have like a couple weeks. Help me out. And like begged you to do it. And you came through and like completely like solved everything for me and made it like, I don't know. You took a bunch of worry away, saved me a bunch of money. It was like an all around amazing experience. But I can only imagine, what the average person is seeing when it comes time for them to do that, right?
Yeah, my story is pretty similar to yours. I got into crypto early, probably 2016, 17, and I was just kind of initially buy some Bitcoin and hold it.
Yeah.
And the price action, supported me holding it, and it was pretty easy. I think my first maybe 2 years in crypto, I had less than 30 transactions total, and they were pretty much all buy transactions, so it was really straightforward. I could keep track of it in a spreadsheet. And then when the market crashed in 2018, I kind of just mostly forgot about crypto and was like, that was exciting, but now I've just round tripped everything, and there were a lot of scams, and the utopian future didn't play out, so I'll just forget about that for now. But then 2020 hit, and man, like DeFi sucked me right back in. I was like, wow, this is an actual legit application built on top of crypto, and it just fully got its hooks in me. And initially I got into some ETH DeFi, but anybody who was here in kind of late 2020, early 21 knows that the gas fees to do any DeFi on ETH, you were eating like $300 in gas fees each end of the transaction. So once I learned about some of the lower cost blockchains, like at the time Binance Smart Chain was one. Then all of a sudden it was like, okay, it's lower cost. So my transaction count just went through the roof. And next thing you know, that tax year I had about, I think, 3,000 transactions that needed to be documented, and my spreadsheet completely broke. And I had heard through some of the influencers at the time who were shilling some of the crypto tax softwares, I really thought that it was just going to be plug my wallets in, plug my Coinbase and my exchanges in, and it was going to tell me how much I owed. I was expecting a TurboTax-like experience, and what I got was not that. Just like every tax software had a different number that it was calculating. Some didn't even support some of the smaller blockchains like Binance Smart Chain that I was using at the time. And it was just a world of pain. I really thought it was just going to be, plug it in the week before my taxes due. It's going to give me a number and I, file that with TurboTax. Not the case at all. And so, that was the point where I was like, okay, I need to figure this out, because I live in Australia. I'm a US citizen. It means I have to pay, or at least file my tax twice a year. And I was like, well, this is painful. I need to figure this out because I'm going to have to deal with this twice a year. Ended up using a tax software called Coinly because they supported Binance Smart Chain at the time, and just spent a bunch of time learning the platform, how to use it, learning about crypto tax, and especially specifically DeFi, like how to consider different transactions for tax purposes, and ultimately was able to get accurate tax reports for myself. And because I had to do that again that same year, because the Australian tax year is complete opposite to the US, our financial year here is July 1st to June 30th. So opposite of the calendar year pretty much. I was like, okay, I need to document this, because when I do this in 6 months again, I don't want to have to go through the learning curve. So I just created some cheat sheets for myself. I recorded some videos and just gave myself a guide to be able to get it done. Ultimately shared that with a bunch of my buddies who I got into crypto and DeFi with to help them out. And quite a few of them were like, this is helpful, but I don't want to spend the time doing it. Can you just do it for me? And that's when I realized, okay, maybe this is the direction I need to go in terms of service offering.
Yeah, oh, that's awesome. So my direction was a little bit different, but I was getting into ETH around that same time, and I did like a couple DeFi farms, and it was more money to get like my money back, just in gas fees than what I had in them. At some point I was like, this isn't working. So I went to AVAX and then to Sol. So a little bit different route than you, but the same, type of issues I ran into. And at the top of a lot of my transactions, like the most expensive ones were it was like stable swaps, or it was like, this doesn't make sense. It's like I knew things were wrong, but I didn't know how to actually fix it. So you actually went through, you did the work, figured out like exactly how to do it. And a lot of those DeFi transactions are tough, right? Like if I'm trying to read the blockchain on a lot of those, like I use your service, and you guys say like, hey, like, can you clarify this? And I'll look at these, like at first glance, and be like, I don't know what I was doing. What did I do here? Whatever I did it was terrible. But to actually like dig in and understand, it's good to know what's going on. But to do that for the amount of transactions that we're doing, like you said, 3,000 transactions, it's a lot of work, because you almost have to go through each one of those transactions and not necessarily adjust it, but a lot of them like just verify that what you're seeing is right, right? Like especially in the tax services, like there's, yeah, I forget the one that I do, but it's like the one that I put
Tax
in.
calculator.
Yeah, crypto tax calculator.
Yeah.
It's like okay, you imported your wallet. Now let's go over half of your transactions because they could be wrong. It's like what?
Yeah.
Like what did you do? You know, so that's the point when I came to you, and then you guys will actually go in and make those adjustments and figure out what actually went on, right?
Exactly. Yeah, and I think it's actually kind of lucky that I got into DeFi pre ChatGPT being any good, because it forced me to learn how to do on-chain investigation, interpret
Yeah.
smart contracts, and just determine what's going on chain. Now I think anybody who's getting into crypto accounting is kind of lucky, because ChatGPT is half decent at interpreting what's happening if you feed it a block explorer link, if you have the pro version. It's not perfect though, so
That's not.
like having learned how to do that pre chat gpt means that oftentimes I'm able to troubleshoot any issues that ChatGPT may be unable to.
Yeah.
But yeah, lucky for anybody who's doing it themselves. ChatGPT can be a pretty good guide, but at the same time, if you've got to use it for 3,000 transactions, just imagine yourself grabbing a Block Explorer link, crafting a
Oh,
prompt,
yeah.
sending it to ChatGPT,
Yeah.
reading its output, and then trying to determine the proper categorization for that, applying it in the tax software. You've spent 1 to 2 minutes doing that, so it's going to take you at least an hour to do like 25 to 60 transactions. And when you've
Yeah.
got 3,000, you're looking at like 100 hours of work.
Yeah, yeah, yeah. And I mean, there's no like easy way around it, right? Like you kind of have to do the work. So when you were doing this, like you showed your buddies the way to actually do it. You're like, hey, this is the way to do it. Here's my spreadsheet. Here's some videos. They're like, no, you do it for me. And you're like, all right, like I got through it twice already. I'm gonna have to do this twice a year, anyways. So this is gonna be something that I'm gonna do. I mean, it's hard. Like I don't think there's many like that. Maybe there's a couple like other people out there that are doing something similar to you, but there's not that many, right? For how necessary of a service it is.
Yeah, I mean, right now, like it's the hardest part for me about this business is getting enough skilled and talented people who understand both crypto and accounting.
Yeah.
That's been the biggest challenge. We're constantly booked out, at this point, sometimes 8 weeks in advance. And it's just because I can't get enough people in that have a good enough understanding of both skill sets.
Yeah.
They're out there, there's other firms that do what we do as well. But ultimately it's a very small pool of people who actually understand it at this point in time. And as much as I'd love to start training accountants, unless they actually get in the trenches and get their hands onto some of these protocols, or even trade for themselves, it's crypto is kind of a second language. I've trained a number of good accountants who the extent of their crypto knowledge was essentially bought some crypto on Coinbase, and trying to teach them on-chain investigation, and it's like teaching them a new language. So
Yeah.
that's kind of the difficult part about it, is it's two kind of very niche skill sets. Like there's less accountants being that are actually like graduating and getting their CPA than there used to be. It's kind of a dying field, unfortunately. Young people find it to be too boring.
Yeah. Yeah. Well, it's something that everyone always says will be like automated away. And
Yeah.
I mean, if you think about, or at least for my taxes, how they've historically gone, right? Like for my normal job, I get a W-2 in the mail. I, will send it to our tax person. They do it. There's like nothing involved for me. It takes, I don't know, maybe an hour of my time total to get that done. But when you're moving into crypto, like everything's so financialized. There are so many more transactions that it's essentially like, the amount of trading that like a high frequency trading firm would go through or something along those lines, right?
Exactly.
Like we're doing like, and like those
All of a
people
sudden,
have
you've
like,
got all these individuals that have become their own hedge fund of one.
yeah, exactly. Where those people that are making those trades all the time, they've got a full team of accountants that are doing all this work, right? Where it's like, we don't have that. I don't have that, so it's crazy to like people need to really think about like, all right, like what are we really doing? And it's like, all right, you're trading a lot. If you're making, I don't even know what, I think I was 16,000 plus transactions last year. So it's escalating,
Yeah.
Yeah. Sounds good. And when you built everything together, it was originally crypto tax sucks, right? And now it's crypto tax made easy, which I think is much better. But
the business was always crypto tax made easy, but
oh,
that's too many.
but that was,
that's actually too many characters for a Twitter handle.
oh,
And
that's what it
so
was.
when I was trying to figure out my Twitter handle, I was playing with some different ideas, and the one that stood out to me was crypto tax sucks. I figured, play to the sentiment of the audience.
But it's like exactly what I was thinking when I was looking at these programs. And I was like, crypto tax sucks. He gets it. All right, I'm in.
Yeah.
Yeah, and it is, you mentioned that like when you actually are hiring people, they have to be in the trenches. I like that you're out there kind of in the trenches with us too. I see you out there, you're buying NFTs, you're talking about DeFi platforms. And I mean, it's different, right? Like it's not going to be, somebody from even like a traditional finance background probably won't understand what a lot of the people are doing. So in order to really understand, you have to be in there, hungry, seeing what's coming up next. And I mean, for me, it's like an obsession figuring out what's coming out next. Like a new platform comes out, it's like I want to figure it out. Like I feel like all of 2024 and some of 2023 was like an insane amount of airdrops for people that were just playing around on platforms. And it was like that was just what I was doing. It was like, all right, like Tensor came out, I'm going to learn everything about it. Like I'm going to do this, I'm going to do that. And it's like, oh wow, they pay you for doing that,
Yeah. I know that's definitely it. I love exploring. I had to have a little bit of I kind of went on tilt trading. So I was like,
Yeah.
oh man, I'm feeling a bit strange emotionally. I need to take a step back, and I had this this self-realization that I was like, oh, I really just like exploring crypto. So I need to put the gambling aspect of this aside, and every time I get into something, I have to ask myself, like, is this fun? Am I doing this, kind of out of the explorer adventurer mindset? And if not, if it's just like I'm buying a lottery ticket, then I have to check myself.
Yeah. Yeah, I feel like there's a lot more of that with NFTs where it's like, all right, there's like a community that I can join, maybe there's another community if I buy a couple of these and, they do all this stuff, they meet on this day. I feel like there was a lot to figure out with NFTs where it's like, now it's meme coins, they launch day one, they go up, and day two, they're down to zero, right? So I feel like there's a lot less of that in meme coins. Like now it seems like there's like a lot of cool infrastructure being built around getting your transactions through and tracking wallets, which I'm finding that part more interesting, but I just am not I'm not like as hooked on the meme coins as I was with NFTs.
Yeah.
But I mean, I still feel like there's a lot there, and unfortunately they're not going away. I think I think that they're just going to keep going, but yeah, I feel like there's a lot more short-term traders, a lot more short-term minded people that are in them than NFTs.
Definitely, man. Yeah, I feel bad for all the kids that I see
Yeah.
getting into the trenches, because man, are they going to have a warped sense of money and investing and gambling issues.
Yeah, I know. I feel like we only really hear like the cool stories about like, that one kid that made $30,000 before school, but you don't see the other kids on the other side of that lost $500 when they're 12 years old or something like that, right? So there's definitely downsides to it. Sounds good. So what would be kind of like what's like your standard recommendation when somebody's like coming to the space and they're like, all right, I don't want to buy an NFT because I don't want any tax repercussions, like, or I'm worried to get into crypto because of taxes. Like I've heard that before from people where it's like, in my mind, it's like, well, like you get taxed if you sell and if you have gains. But I feel like I've heard that a lot. Like, is that something that you hear, or are you kind of dealing with people that are like more in the trenches than that?
Yeah, I mean, dude, I didn't get into a lot of the Bitcoin stuff just because I knew how difficult it was from a tax perspective. So I can totally understand that.
Yeah.
But I would say that my standard recommendation, really, for most people, when you're initially exploring, you're probably not going to be on the outer edges of crypto. If you're kind of exploring more what's already established, then all you really need to do is set up a crypto tax software like Coinly or Crypto Tax Calculator or Awaken. Those platforms essentially allow you to take your public wallet address, you give it to the platform, and it's going to pull your data off the blockchain. And then any centralized exchanges you've used, you can then either pull your transaction records as a CSV or Excel file, or you can use their read-only APIs so that the tax software can pull your transactions. And that's really important because we've seen a number of platforms go bankrupt. I've seen a number of like blockchains, for example, where the data is like, sometimes the metadata is messed up if you try to use the public address after it's, kind of like Terra would be the example. Terra Classic has like really poor support just because nobody really uses it anymore, and a lot of people had high transaction volumes that they could have pulled the data early on, and then now they have messy data. If you just get all the data onto the tax software, whether you are going to go look at it or not, at least you have it so that you can substantiate any transactions you've done. I have had somebody come to us before that they were being audited by the IRS, and the IRS was essentially, the auditor was saying, I see that you have these deposits into your wallets. You don't have any records of where these came from, therefore I'm going to assume that they were income. And that was over the course of like 6 years. And over the course of 6 years, they had sent, millions of dollars. Like, granted, they sent some back to that exchange, but, they had sent millions of dollars into their wallet at some point. They couldn't substantiate it because they didn't have the records before that exchange went bankrupt. Mm-hmm. And then now the IRS is saying, well, if you can't substantiate it and tell us where this came from and prove that it was yours and the source of funds that you used to acquire that crypto, we're going to consider it income when it hits your wallets. And so all of a sudden, the IRS auditors are telling them, we think that you have like millions of dollars of income over the last 6 years that you need to pay penalties and interest on the unpaid taxes for. And if that person had just immediately started pulling their records, which is super easy to do, if they just did that from the start, then they wouldn't be in that hairy situation in an audit. So that's kind of like the minimum thing I would say to do. Most of these crypto tax softwares are free to set up. You only pay at the point where you need to download the tax reports. So that's kind of the standard recommendation. It's like you'll have all these transactions in your wake, but make sure that they're documented. That way either you can go through them or you can hire someone like me to go through them and make sure that all of that's cleaned up when it comes time to report your tax.
Yeah. And do you recommend like yearly do that or more often than that in case there is something, like an exchange that goes down or something?
Yeah, so I usually recommend more frequently. Often, like for me personally, I just will do every month, I'll go through, make sure I've got all the data that I need, and I'll usually just do a quick review of my transactions in order to make sure that I have a rough idea about kind of where I stand from a tax perspective.
Yeah.
The problem is, like, for someone new, that's perfect. Like, you start, you get it set up, maybe once a month you review it, maybe once a quarter if you have less time. But you have to think about, if you go back and look, are you going to remember 3 months ago, 4 months ago, 5 months ago, what you were doing and what that transaction was? And if not, more, just looking at it more frequently can be really useful. I personally find that even at the end of the month, sometimes I'll look back at my transactions for the month and think, what the heck was I doing there? And,
Yeah.
sometimes it feels like a month isn't frequent enough when you have really high transaction volumes like I have recently.
Yeah.
But yeah, if you're transacting less frequently, then, and you have a very like specific pattern of trading, like you're just dollar cost averaging. Every week you buy Bitcoin and that's it, or every week you buy Sol and that's it, then maybe you can have less frequent reviews of your transaction data.
Yeah. Yeah, I should probably focus on doing that too, especially especially when you're looking back, tax day comes, for us it's in April, and it's like that's when you're just trying to crunch all this data. You have no idea what you were doing. And one of the things that it's not a problem, but it's so easy to just like spin up a new wallet, or I'm going to try out Backpack on my phone, so I'll open a new wallet, send a little bit of money there. So it's like all of a sudden it's like, wow, that one wallet on my old phone, I need to track that. So it's like anytime you open a new wallet, anytime you get on a new exchange, you always have to document that somewhere, just because it can add up pretty fast, right?
Yeah, definitely.
Like,
I find any holes in the data is a no-no. A lot of people
yeah.
will be like, "Oh, sorry, like I didn't think that one mattered. I haven't used it in years." And it's like, well, we needed that data to figure out where did these tokens come from.
Yeah.
Like, although you're not using it anymore, you still have crypto that you sent from that wallet to the one you're using now, and we needed to know how much did that crypto cost? How did you acquire it? And if you don't have that record, then again, if you end up audited, you could be in a bit of a hairy situation.
Yeah. Yeah. Like, and in that case, what's the safer play on that? Because I think we did this on one of my transactions. I think it was BlockFi, where I think I had ETH on it from a long time ago. I sent it to a wallet, and you're like, hey, like, what was the cost basis for this? And I was like, hey, I can't log in. So I think you just leave it as the cost basis was zero and all of it was profit, right? Or I forget exactly what we did, but does that
would be
does
a
that
really
sound
conservative play.
Would it?
Yeah, I don't remember that specific situation. I've had a few people that have had some BlockFi issues. Luckily, some were able to, through the claims, not necessarily the claims portal, but through like the team doing the bankruptcy, were able to acquire their records. But that's why I say, like, if you're just getting started, consistently pull your records, especially off the exchanges, because they can go bankrupt. They can shut down. Like, now FTX, through the claims portal, you can actually get your records, and they're pretty accurate, but they don't provide records for sub accounts. So we had a few people who used a lot of sub accounts for trading bots and stuff like that, and all that data's gone. But for a while there, it was like FTX went under, then the website got hacked, nobody was able to log into the platform, and it was questionable. Like, literally an entire tax season went by where there was no access to those records for people, but they had taxable transactions on the platform, and there was this huge hole, this huge gap in the data. So it's one of those things where it's not to scare you away from participating in crypto, but it's to say that if you're gonna do it, just be smart and make sure that you're pulling your transaction data. It has happened and is likely to happen again, that you could potentially lose access to something, and you want to have the records, otherwise there could be some negative repercussions.
Yeah. And there's kind of two sides to that too, right? You use like a centralized exchange or a SEX. They use that, and it's usually pretty easy to track all transactions on a centralized exchange, right? Like all my Coinbase transactions, I can go to it, pull them out. Like, are they going to be 100% right? No, but they're there very easily, where it's like, if I'm trading on Jupiter, or if I'm trading on, any sort of decentralized exchange, I have to kind of look for those records, but they're on the blockchain, right? Like they're not going anywhere, so they will always be there. It's like, depending on what service or what block explorer I look at. I mean, I feel like Solana got a bad rap for their block explorers for a while, because they weren't necessarily the best, but they're good now, right? Like they're just as good as all the ETH ones. So I mean, you can you can dig into all your transactions in all of like your self-custody wallets pretty easily now, and they're not going away.
Yeah, there's some on-chain apps that it can be helpful to get your records from. Like, for example, we had one client who was Banks, the NFTFi platform. They were fracked before. Was that?
I think they had the fracked NFTs, and then they had the Banks NFTs, but they also had an NFT lending platform on there too, right?
Yeah. So I think I found that like you can get your Banks NFT lending records, for example, from the current DApp, but you can't get your records from when they were fracked.
Oh, really?
Yeah. So there's certain like on-chain, there's certain things where the blockchain captures it, but what we can't see is like what happened there. There's been some instances like Jupiter Perps, for example. I know the Jupiter team is planning on creating better transaction records that a user can download as a CSV file or an Excel file. But like Jupiter Perps just looks like there's a few program instructions that you can see on chain, but it makes it difficult to determine like which position is open and what the profit and loss for that position is. Whereas like Drift, for example, you can pull your transactions as a CSV file and more easily calculate the P&Ls. But like Drift is a great example. All we can see on chain is if you deposit or withdraw tokens from Drift, but we don't know whether you actually used the lending platform and earned interest, whether you opened a perp trade, whether you did a spot trade. All of that has to actually, you would think this is happening on chain, but you're not actually seeing that on chain. So there are certain platforms that even though they are on chain, they're still kind of centralized in the sense that you need to like see which transactions were associated with your wallet and hopefully pull those transaction records just in case, like, for example, development stops on the project and they no longer give you access to those. So yeah, there are some examples. Usually like perps trading platforms would be like any perp dex on chain is a good example. A lot of the NFTFi stuff, it's good to get your transaction records. And anything that's kind of like advanced like that, it can definitely help to pull your records using your wallet address.
Yeah, and I think I even saw that, I think Tensor, if you have a Tensorian, they'll give you tax records now. I think maybe they'll at least prepare some sort of file for you. I don't have a Tensorian anymore, so I couldn't actually pull the file, but I saw that was an option. So it seems like something is interesting there. At least people are thinking about that more, right?
Yeah. Luckily with Tensor and Magic Eden, there's some wonky things about how it appears on chain, but you can usually see, unless it's a CNFT transaction like a Tensorian, you can usually see what was happening. If you're using some of the more like advanced parts, like fund locks and stuff like that, it's not as easy. But if you're mostly just listing, bidding, market buying, instant selling, like those are examples of NFT transactions that for the most part you can see on chain. But yeah, when you start using some more advanced features, it can be really helpful to pull CSV transaction records if they're available.
Okay. And one thing you mentioned there was CNFTs. So compressed NFTs are probably pretty important for a lot of the listeners because we've got a following on Drip House, right? So Drip House, I upload this to Drip House. I don't know exactly what they do. I think they store it in Arweave, and then anybody that wants to secure it, it actually gets sent out as a compressed NFT to all their wallets, and then they can play this podcast like directly from their wallet if they want, or in the Drip House platform. It's pretty cool. But yeah, it's really awesome. But I'm in Drip House all the time, and it's 10 droplets to secure a CNFT. So I have, I don't even know, hundreds and hundreds of these CNFTs in my wallet. So like what's the way to track those? I wonder if Drip House has something that we can look at.
Yeah, well, drip, like, I mean, I know some people can purchase droplets. I don't know. Like, we don't have a lot of that. CNFTs are really difficult because you don't really see the transaction. You don't see the CNFT on chain. So unlike an NFT, which has a unique identifier, so if you, let's say, take Tensol and you're buying an NFT on Tensor, you're going to see Tensol leaving your wallet. You're going to see that unique NFT entering your wallet, and then it becomes obvious that it's a trade. But if you were to buy a CNFT, you're not going to see the CNFT. You're going to see the SOL leaving your wallet. That's it.
Oh,
And
really?
with Tensor, you might see that it says like Tensor CNFT program on the instruction logs, but you have no idea that that's like Tensorian number 69. You know, it's like you don't know which CNFT that transaction is associated with, so it makes it quite difficult. I'm hoping that potentially Helios's X-Ray, when it comes back on, is going to have better ability to track CNFT stuff. And I think that if I'm not mistaken, that Tensor's CSV outputs do actually give you any CNFT transactions that you might add. So it makes it easier to track like Tensorians or Saga Monkeys or any of those kind of more popular CNFT transactions. And I guess, anything you buy off Drip secondary as well, off Tensor would hopefully be in those files as well.
Yeah. Sounds like I need to buy one of those and get the CSV from there, see what's going on.
Yeah, it makes me want to look right now and see if you need a Tensorian, but that would be a really nice feature for all users.
No, it really would. They do a lot over there. But
it is exclusive for Tensorians, I can confirm. Wow. There you go.
I looked the other day because I think, when was it? I heard that they had tax reporting, and I think that you guys had a question about an NFT, so I was researching it on Tensor, and I was like, man, they've got to have something, and I didn't have it anymore. So, I mean, it might be the reason that we get one of those. No, but for like the average user on Drip, like so you can either get drops like airdropped every day, or you can buy some and they convert to like a small amount of USDC at the end of the day. So I wonder, I mean, it's like you secure one for 10 droplets, and it's like, I think, what is that, like a cent or something like that?
But that's not on chain. It would be really hard to track the cost basis of your droplets if you're both buying them and claiming them for free and then CNFTs. It's like a really, especially for how low of a cost it is to secure a collectible, it seems like it would be like, you're better off, to be honest, just not worrying about that. But if you are a creator and you're receiving royalties for having people secure your collectibles, then that just would be easiest to consider as income in a lump sum, whatever the payouts happen.
Yeah. That was actually a question that I had, and I didn't know if it was going to be a good question or a bad one, was like, can we just like exclude all transactions under $10 and just like, put like a blanket pardon on all those transactions? Because I feel like I have so many that are small.
Because then the cumulative effect of that is like, now the tax software's tax engine is not going to know the cost basis for those. So you could have negative balances, and it could, cumulatively or in the aggregate, it could really have a significant tax effect. Do you have to go like insane on investigating those transactions? No, you might take a conservative tax treatment of them. And just figure, well, it's less than $10, so even if I have to pay tax on this, it's not a big deal to me. But you can't just like delete them or ignore them from the tax software, because you're going to create an absolute mess. That makes sense. You can't just delete transactions like that. That makes sense. I see that so often, man. When people come to us and they're like, I did my tax for 2023. I just need you to do 24. Then we get in there and I'm like, dude, you deleted like 1,000 transactions in 2023, and now it looks like you didn't purchase like thousands of dollars of the crypto that you've disposed this year. So yeah, like you might have thought that you saved yourself money last year, but now, the bell tolls. The bill has come
Yeah.
due.
Yeah. So, oh man, yeah, that sounds like such a nightmare to deal with. So, what if they deleted them out? Are you like gonna go back in and add them in, or are you just gonna treat all of those like the cost basis, was zero, so it's all profit type thing, or how? Man, that sounds like a mess.
Yeah, it
As a
depends.
case,
They can
probably a
either
case by case basis, probably,
case by
right?
case. Yeah, yeah. It's
Yeah.
like because we can't go back and fix it, and then because then they've reported tax based on, and usually probably underpaid tax based off of one set of data that they fudged, and then if we
Yeah.
go back and fix it so that the next year they're not overpaying on tax, then unfortunately that means if they get audited, they're going to get dinged, and they're going to get dinged hard
Yeah.
because they've essentially disposed of the same inventory multiple times, or there's just errors. So pretty much the options in that type of situation is one, just say, okay, well, now this year you're going to have to get dinged for the full market value of the sale. Cost basis is zero. And then we kind of start fresh next year with proper records by just
Yeah.
putting in some balance reconciliations to get things accurate. Or, we go back, we fix last year, you pay any unpaid tax, any potential interest that you might owe on that by filing an amendment. And then this year, we keep it clean, keep it accurate, and do the same moving forward. So yeah, that's pretty much the two options that exist at that point. But yeah, you can't just keep fudging year after year after year and
Yeah.
expect not to get potentially dinged for that.
Yeah. What's like the most common error that you see, or like what are people doing that's like terrible for themselves when it comes to taxes? Like, is there something where it's like, hey, why do I keep seeing this? Like, what's going on? Like, this is definitely something you don't want to be doing. Like, obviously, deleting transactions is bad, but I don't know if there's something else that comes to mind.
Yeah, I mean, I'd say that the two biggest things that I see that people do that they think is going to help them that actually would hurt them is omitting transaction records. So, saying, I haven't used that wallet, let sleeping dogs lie, but they sent a substantial sum from that wallet to an active wallet. Same goes with exchanges. We already talked about that. That's one. The other is kind of like deleting or ignoring transactions,
Yeah.
just because it makes your tax reports look more favorable to you.
Yeah.
And yeah, I'd say the other thing is just anybody who's going to use our services. We tend to, if they worked on it, just delete and resync everything fresh, because most people suck at doing this themselves, make a lot of
Yeah.
errors, and it's actually a lot easier for us to just have a clean slate. It's easier for me and my team we know the mistakes that the algorithm makes, and so we know what to look out for. But it's really difficult when all of a sudden you've got human error, or if something's deleted or ignored, it's completely outside of our awareness. We can't see the transaction anymore. So it's not until we get to the end of the process that we then say balances don't reconcile. We might look at the deleted transactions and be like, these should not have been deleted. What the heck?
Yeah. 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 It's tough because it's a stressful time, right? I mean,
Totally, dude. Yeah.
I think,
So, like,
I
been
think,
there.
I think
Still
when,
there.
I think when I first reached out to you, like, I, like all the numbers, I think I did like, was it Netrunner? I did Crypto Tax Calculator and maybe even one other one. And I was like, there's no way I'm going to owe $60,000 in taxes. I was like, this is insane. It was something super high like that. And I was like, I know these transactions aren't right. Like, is that pretty common? Like, I mean, I gave it to you guys, and you guys went through it, and like, it like was a negligible amount. Like, it was like under 10,000. It was like the amount that it saved, and like the worry that it saved was like unreal. But is that like a pretty common like sequence of events for when people come to you?
Definitely. Yeah, I'd say we crunched the numbers on this. I put it on a tweet thread, but It was, I don't remember the exact numbers off the top of my head, but the majority of the time, if you take what the tax software says out of the box, and then you compare that to when we've actually reconciled the balances and categorized everything, what it says, the difference was like on average mid five figures. So
was it really?
it was like really it was a really substantial like overstatement of capital gains. And anytime that it understated capital gains, people might, think, oh, that's great. Like I owe less than I thought I did. That was kind of like low five figures that it would understate it. The issue is if you ever get audited or, in future years, probably the bigger issue is that in future years, you probably have a negative balance, which means that if you go to sell a token, the tax software is going to go, what's the cost basis? Oh, it has a negative balance, therefore cost basis is zero. And so if you sell the token for $1,000, then it's going to say $1,000 capital gain. So you might have this, it says like 10,000 less this year, but then the next year it's going to be like 10,000 plus more. So you're like not saving any money de facto. And then the other thing is if you just report and you underreport and you happen to raise a red flag and someone comes and takes a look, then now you've got penalties and interest that you're likely to have to pay as well as the headache. So, generally you want to be erring towards I'm aiming for accuracy rather than, I'm aiming for the optimistic scenario.
Yeah. Which is crazy because, I mean, that's such a drastic difference than what it is. And, the way that I viewed it too, and I don't know if this is right, like, our tax software, the best tax software isn't getting it right. But that doesn't mean they aren't going to in 2, 3, 4, 5 years. And the regulators are going to get that same software down the line. So it's like they'll be able to run it, right? Like I there's no doubt in my mind that like at some point they will be able to run a pretty sophisticated, way to run it and have a pretty close view of like what you should have paid versus what you did. Right. So like in my mind, I was like, all right, I want to get this as close as I can. And it was like I was pulling my hair out after like 10 transactions, so I don't know what your view is on that. Like, does that kind of sound like do you think that, everyone talks about how like worthless the IRS like truly is. But I mean, there's a lot of people working there. I mean, it's like they can figure things out after a while, and it's like people are definitely watching blockchain, right? It's like, especially as our industry kind of like matures, regulations lighten. I think that's definitely going to be the case. So, what are your thoughts on that?
Yeah, I agree, man. I think most people are thinking, well, I've gotten away with it this far, and so I'm going to continue getting away with it. But the thing is, there was this report that was put out. Kind of like a third-party report that looked at the IRS and Treasury's enforcement actions on things, and the IRS and other government cybercrime divisions have done insanely well when it comes to like going from investigation to prosecution. That's mainly for like money laundering or like massive tax fraud that they've gone after. So most retail investors at most have received kind of like soft enforcement letters, meaning the IRS has been like, hey, we see that you transacted on Coinbase, but you haven't reported any crypto, so this is your chance to come back into compliance. That's the main thing that's gone out, but the review of what they called Operation Hidden Treasure essentially showed that there was pretty much no enforcement action that came out of that. But what actually came out of that is that the IRS acquired licenses to softwares to be able to investigate any non-compliance and had gone through huge training on how to actually investigate digital assets. So essentially it was like nothing has happened. It was like a multi-year program. And, this report was like, why the heck didn't anything happen? And they were like, well, we trained, we've been training in the background, and now we have the capacity to be able to move towards enforcement. So My guess is that, especially as the new IRS regulations get put in place around digital assets and there's more clarity there, that there's likely to be more enforcement on kind of like the civil level versus the criminal level. So yeah, I wouldn't be getting complacent. And yeah, it's like, now's probably the opportunity to come into compliance if you were non-compliant in the past, with probably less negative outcome.
Yeah, yeah, and another thing that to think about that too is like coming into compliance doesn't mean you're going to pay $5 million, right? You're not paying like 100% of your gains, right? Like if we're talking about if you had gains, it's what, roughly 35% of that you'll end up paying, right? Like it's not 100%, and it's not necessarily all of it unless you had a really bad year after that or something along those lines, but it's not, you're not coming for everything typically, right?
Yeah, and like even the penalties and the interest have caps. Like if you fail to file your tax, the cap on the penalty is 25%. And if you fail to pay, then essentially they just charge you whatever the like prevailing interest rate is. I think was like 8% last year. So it's not like the penalties are going to ruin you if you come back into compliance. And sometimes you can actually like negotiate or have your accountant negotiate on your behalf with the IRS or whatever tax office you report to. And sometimes you can get those penalties waived.
Oh, really?
Yeah. I've seen situations where like some accounting firms will have good negotiators on staff who are able to, especially for people who might have larger penalties or unpaid tax bills, be able to get some leniency there in terms of the penalties, where it's essentially like, hey, look, we didn't know how much we owed. now that we have the technology available, we see that we owed more than we said, and this is our attempt to come back into a compliance. Like, please, give us a little break here. And sometimes you can get that leniency, but it just requires you to make a really good faith effort to come back into compliance. And for a lot of people, like if I just look at the last couple of years, you can, in the US, you can file an amendment to your tax return up to 3 years after you've filed that tax return. So let's say for 2021, you filed that tax return on April 15th, 2022. You have until April 15, 2025 to file an amendment. If you lost money in 2021 and you didn't properly document that, well, now you can go back, amend that, claim those losses, and then you can carry those forward. So it's kind of like a get out of paying tax-free card. I saw a lot of people kind of in 2021 finish the year with a negative P&L, even though it was a bullish year. Tons of people in 2022 had huge losses. And so for a lot of people, if we do like a 3-year look back period now, it actually tends to mean that rather than owing penalties and interest, they're able to kind of claim this loss that they're able to pull forward, sometimes all the way into this year when they have profits, and actually will reduce the amount of tax that they owe in the current year because they can use those losses to offset it. So awesome. Coming back into compliance doesn't always mean that it's going to hurt you. Sometimes it can actually benefit you, not just in the peace of mind you have that you're not looking over your shoulder seeing if the IRS is chasing you, but also because now you've in a way got an asset with those carry forward losses.
Yeah. Oh yeah, that's awesome. Yeah, and that's a service that you guys offer as well, right? You guys will actually do the 3-year look back for clients too, right?
Yeah, exactly. We tend to err towards the historical cleanup where possible. If a client has like substantial assets that the balance may have carried forward for multiple years, especially with NFTs. Just because tax software is so bad with NFTs, like anybody who bought in the 2021 bull, any NFTs that probably were underwater somewhere in the last couple of years on those purchases. And so that ends up being kind of a huge asset, if you will, for them to potentially tax loss harvest in the present year and be able to just save themselves a bit on tax.
Yeah, yeah. So I was definitely involved in that, and I have been tax loss harvesting some NFTs, and we got to get into this because I feel like there was, I mean, NFTs went down, but I like actually like looking at the dollar values, they're not really down as bad as you think. Like I keep thinking about my my SMB, my Solana monkey business. I originally bought it for 215 Sol, and then I sold it at 100, and then I bought it back at 60, and then now it's at 40. But through that time, Solana went from like, I don't know, $15 to 8, and then now it's at what, 220 or something. So it's like the dollar value is actually up, even though it sounds like I'm down really bad. And it's like I'm actually really not. Just if I held the Sol, I'd have more. But a lot of other NFTs that I had, it's like looking through my wallets, I was like, I don't want these, and I think I reached out at one point. I was like, what should I do? Should I like build some complicated strategy to like sell these to myself? And I think you were like, if you don't want them, just get rid of them, right? Like that's the move. Like if you don't see yourself holding them, you don't need to build some strategy. You can just sell it for the loss and take the loss, right?
Exactly. Yeah. Yeah. And that's something that I have recently had to encourage people to do is like, I'm not giving financial advice, but if you have NFTs that you don't want, a lot of people were just holding them or would burn them. And, holding them means, well, now you're not taking advantage of the fact that you could get a tax loss that can offset gains.
Yeah.
Major win there if you do that. Or I should say consolation prize, really, for the loss that you took. But the other thing is, like, when it comes to tax loss harvesting, I tend to try to have what would be considered an arm's length counterparty. So someone who's not related to me, acting in their own financial best interest. Because if I sell to an arm's length counterparty, then the IRS can't come back and say, we have a different idea about the value of the asset you sold when you sold it. So if I bought, let's say you bought your SMB for 215 Sol, let's just say that it was like $20,000. Let's say you then burn that SMB because you're like, not that SMB is a dead project, but like, let's say you just burned it because you're like, this is dead, it's never going to be worth anything, I just want to move on and take the tax loss. Well, if you're now reporting to the IRS that this thing I bought for $20,000, I'm claiming that it's worth $0 when I sold it. Well, they're probably going to take a look at that and be like, oh, it's a little shady, yeah. But if you're selling it, let's say, into whatever liquidity exists on Tensor or Magic Eden, even if it's 0.02 Sol because someone's going to take it, burn it, and recover the rest of the rent, and so it's net profit for them, that's an arm's length counterparty. That's someone you haven't pre-negotiated with. They're not related to you. They're acting in their own financial self-interest. There's no way the IRS can say, we have a different idea about the value of that NFT when you sold it, because that's what it sold for on a marketplace. So always trying to find that is the ideal situation. Most, even if you were to, let's say, list an NFT at like 0.01 Sol on Tensor or Magic Eden, it's likely that some arbitrager would go, okay, I can buy that, burn it, and I'm going to recover 0.03 or 0.05 Sol in rent, whatever. And so it's net positive for me to do that. And, maybe they're farming some Tensor points. So there's probably a way that you can find that liquidity. Meme coins, tokens like that, it's easy. Like, usually you can always just sell into the AMM on a decentralized exchange. Liquidity tends to be there. But even for NFTs, which have low liquidity, you can sometimes find that liquidity. So I think that's kind of an important concept. And I don't know when the episode will come out, but I know Sol Incinerator guys are building a version of Sol Incinerator that will essentially act as that counterparty to buy your NFTs from you. If the collection is completely rugged, no liquidity exists whatsoever on any marketplaces, it'll just be a way that you can kind of sell to them.
Like
And
rather than burn, like they'll buy it for whatever they'll burn it for, so it actually looks like it is a counterparty, or it is a counterparty. It doesn't look like
yeah,
it.
yeah, because when you use Soul Incinerator, it's just an app that calls the burn
Yeah.
function on the token account. It's
Yeah.
they're not like the ones who you're sending the NFT to, and they are doing something and then sending you Soul back. Whereas I believe that the new architecture, it'll be like that. It'll be
Yeah.
a swap. It'll be a
Yeah.
trade. Yeah.
That's awesome. The Soul Incinerator is such a good app. It's like one of the most used apps right now. It's great.
Yeah, man. I love those guys. They're
Yeah.
they're great positive figures within the Solana ecosystem as well.
Yeah, they really are, huh?
Yeah.
I've had a slug for a long time, but I've never really been like that involved with the community. I got to check in with them. So all right. So one question I got to ask. So when it comes to tax loss harvesting, the Quex, it's like my favorite NFT, the ducks. They upgraded to a new contract. They migrated, I guess, from Metaplex to the WNS standard. So essentially, you had to basically burn your NFT and mint it in the new protocol. Could that be considered a tax loss harvest event? Not financial advice, just
Yeah, I guess potentially. Like you could see it as trading one crypto asset for another.
yeah.
So
Because you are getting the other one back, I guess, right?
yeah, if you get the other one back, then you're the thing that's so difficult about NFTs is that they're non-fungible. It's
Yeah.
so hard to derive a actual price for them. The new IRS guidance seems to hint at like if it's a 404 collection, then actually it is fungible because it always
really?
converts in. Yeah, because I mean, like let's
Just
take
converts to a token, right?
yeah, exactly. Like if you look at Lambo Space Princess, it's a NFT collection that if you want to, you can always convert it into 100,000 of the LSP token. So that then means that every single Lambo Space Princess NFT de facto will have the value of whatever 100,000 LSP is at the time. It essentially means that they're like fungible, non-fungible tokens. So any like 404 or kind of hybrid NFT like that is a little more straightforward. But you look at any other NFT, and it's really like what's somebody willing to pay for it. I look at some of my favorite NFT collections. When I go browse the marketplace, there's NFTs that have been listed for 3, 4, 5 months. And it means that, nobody values it enough to part with their soul to buy it. They don't like it. So that NFT might have a value of 0, even though the floor price is high. It's to me, it just seems so difficult to actually value in NFTs. There's been no guidance released on this is how to value an NFT. So all that to say that with the Quex, when you're changing it, it's like, well, you kind of have to then make a judgment call. Is it you're taking the original one and you're swapping it for the new one? What are you saying the value of the new one is? Are you saying that it's 0? Well, that doesn't make much sense. Are you saying that it's equal to the value of the old Queck? Well, what's the value of the old Queck? Is it equal to the cost basis that you paid for it? And then therefore it's kind of like a neutral transaction. There's a lot of different ways you can interpret it, and I couldn't tell you what the right way to go about it is. You kind of have to make a judgment call or potentially consult your own tax advisor about what they think that you should do with that transaction. But I'll tell you, you don't want to mix and match. You don't want to say, okay, for this Queck, because it has a huge loss, I'm going to assume this. For this Queck, because I have a gain, I'm going to change the method that I'm doing for this. You got to pick one and stick with it.
Yeah, that makes sense. I feel like the way that I'm thinking of it, it's like I'm not really like planning on selling any of them, at least relatively soon. So it's like, why not just like mark them all to 0 and start over again? It was kind of my thinking, but I don't know. Just seems to make sense.
Yeah.
I feel
That'll be another one that's a red flag, dude. It's like, you bought this thing for $1,000. You're saying that it's worth 0, but now you still have an asset. Like, kind of sketch.
Yeah, I guess so, huh?
Yeah.
Yeah. What other red flags are there? I feel like one of the things that we don't want to do is get audited by the IRS. It's like I feel like the way I think about it is like, you just do your best. find what you can, report what you can, and it should be good. But like obviously, there's going to be something that you miss, right?
Yeah, dude, hands down, biggest red flag is just not reporting at all when you've used the KYC'd exchange in the US especially.
Yeah.
IRS is going to be able to get access to that data. They're going to be able to know whether or not you've transacted. Whether or not that platform default sends your stuff to the IRS is going to be able to get access to it. So if you just are saying, well, this is anonymous, it's not anonymous blockchain.
Yeah.
So that's probably the biggest red flag. Making a good faith effort to report is probably going to reduce the chances of any hard enforcement actions. And outside that, it's like if you're just W-2 employee and then all of a sudden out of nowhere you're saying that you lost more money than your annual salary in crypto because you took all these losses, well, that might raise a red flag. So like, oh, this kind of is like a little bit of a pattern interrupt. Maybe we want to take a look at why are they claiming all these losses? And then the other thing is like generally filing an amendment on your tax tends to be a red flag. However, if the purpose of you filing an amendment is to come into compliance, then it's not something to avoid just because it's a red flag. Because that would be like, it's like you rock up to a breathalyzer test and it's like, if you're sober, you're good. But if you're drunk, you probably want to avoid that. So, if you're coming into a compliance, it's like rocking up to a breathalyzer sober. Yeah.
Yeah, that's a great analogy. I love that one. Yeah. No, that makes sense. Yeah. Man. Yeah, that makes a lot of sense. I need to go through, make sure I don't have anything. I feel like that's one thing that you guys have been. I feel like you guys have worked on your platform a lot more, and it's like pretty formalized now. And one of the things that I messed up on was I didn't give you all my wallets. So that's one thing where it's like at the time I was like, man, like I messed up, but it's like I'd rather you guys call me out on that than the IRS, right?
Yeah, dude, amen to that. And yeah, man, it's pretty crazy. When you first became a client, it was pretty much me and 2 full-time accountants, and we had like, somewhere in the neighborhood of probably 100 clients. And now we're at about 10, almost 11 full-time employees when I hire the next accountant. And well over 500 clients at this point. So we've
awesome.
we've seen a lot of shit to put it in French. Yeah, so we've we're constantly kind of refining our systems to make sure that things don't slip through the cracks, and that any of these consistent errors that we see, like I said, like people not giving us all their wallet addresses, it's like we're trying to create as many systems as possible to capture all that data so that it doesn't create any issues as the process kicks off.
Yeah, well, and I imagine that of those 500, a lot of them are recurring clients because you guys do have an amazing service. Like it's really well done, and I would imagine that all of those people, like all of their transactions, have escalated in the last couple of years. Like I don't even remember how many I came in with, but I'm sure I've got 2 or 3 times more this year, and I don't see that stopping. Right? Like I was kind of thinking about it. I was like, all right, like I kind of see myself being on chain a lot more in the future. Like I see like better payment rails, better stores of value, like better savings accounts with Lulo, like better custody methods, and it's like all so cheap to do. And it's like I see myself doing a lot more on chain, and it's like I don't know how to do that, like how I should think about doing that in a more tax advantage way. It's like, should I even have that in my mind, like trying to be like focus on the tax side, or just focus on like, hey, just be as profitable as you can, and make sure that you do your taxes at the end of the year. It's like there's 2 sides of that where it's like it's almost hard. Like you almost don't want anything to get in the way from like making a profitable trade or anything, right?
Yeah, dude, I err towards profit maxi for sure. I mean, the thing though is like we started this service in a bull market, and so we saw that we had, like just like me, we had a lot of clients who just had huge transaction counts for the first time ever, didn't know how to navigate it. But then when the bear happened, most people, like a lot of people, their transaction count drops off. There's kind of less innovation and less new stuff and less opportunity on chain. So transactions drop. So even though we went from essentially like a decent client load, we doubled the client load into the bear, but our revenue stayed the same because we kind of built on like a transaction basis. So many less transactions, but more clients. And then now it's like our client load has grown and the transactions have grown. But I imagine that in the bear, the number of transactions per client is going to go down substantially just because there's going to be less opportunity on chain. There's probably going to be less innovation during that period and kind of new things coming out. And the thing that's interesting is although we've like raised our prices over time, we in a sense have actually reduced the prices because we've reduced the cost of like essentially processing a transaction. Part of that is due to improved tools, whether the crypto tax software is adding automations or whether it's building internal tools. So I think that as things progress, we're going to continue to be able to process higher volumes of transactions at a lower kind of cost per transaction. So yeah, I think for the end user, it's like ultimately just be a profit maxi, do what you're going to do, and let us deal with it in your wake.
Yeah. I feel like if you letting things get in the way, it's like you miss the moment, right?
Yeah.
Yeah, sounds good. Cool. Yeah. Anything else that you guys kind of see in the future? I know you kind of mentioned AI, but I haven't like AI isn't quite there yet with a lot of the Solana transactions and a lot of the crypto stuff. Like I feel like the only way that I can really use it is like to explain concepts or like how a protocol works. It's pretty good on that side. Like I feel like new people coming into the space have it a lot easier than trying to like figure out Ethereum and MetaMask and like how all that stuff works. You can just kind of like ask ChatGPT how to do it. But like as far as like tracking transactions, like it's not there, right? Like you said, you'd have to paste in like every single transaction. You can't say like give me, my full transaction history on this wallet type thing. Like,
yeah.
Do you see that coming down at all, or?
Yeah, potentially. I think, especially with AI agents, I think the cost of compute for them right now probably makes it unrealistic for every individual to kind of have like a tax AI agent that can help them out. But
yeah,
I do think that will be something that improves user experience for crypto tax in the future. Because like AI is not necessarily there yet on its own. But I think if you have like purpose-built AI agents that are, because the thing with the AI agent versus like a chatbot is that an AI agent you can like layer automations on top of it. So if you've got one that essentially you can run and it can do some of the work for you, that's going to be amazing. And I don't see that as being something that kills our business. I think it again becomes something that enhances it because then we're able to essentially have our AI agent as an employee that is really low cost. It's like the cost to compute, and they are essentially, we've got a human in the loop that then's doing whatever the AI agent can't, or reviewing and doing quality control on that work. And so I think that that's going to reduce essentially the cost of like processing each transaction for tax purposes. I think the other thing as well, just looking at the future, is that we're going to have more binding rulings, more regulations that are actually clear in terms of what are the rules, how are things meant to actually be taxed, whereas right now there's still a lot that's up for interpretation, a lot of gray area, and a lot of kind of like guidance that's been given that isn't necessarily based on law. So I think that, moving probably into 26, 27, that likely most countries that have a high amount of interest in crypto are probably going to have more solid regulations and more solid rules in effect.
Yeah. Another thing, I think you kind of brought this up earlier, but like the way, like the amount of innovation that happens in blockchain is like insane, right? Like it's hard to keep up with everything. There's new blockchains, there's new apps, there's new things to do. Everything's financialized. And like the tax reporting isn't necessarily going to be able to keep up with that, because like you still have to report on your taxes every year, right? So I feel like there's always going to need like that human touch, and there's always going to be, you know, people that make like insane transactions like me that don't make any sense, that somebody's gonna have to make sense of, right? So it seems like, yeah, it seems like there will always be, at least, yeah, there will always be the need for something, right?
Mm-hmm.
Yeah,
Definitely.
sounds good. Cool. Well, what else do you guys have coming up? Are you still planning on launching Tax Soul at all?
Yeah. That's just on the Sanctum team's timeline. Whenever, because they're the one that launches the creator coin, and I kind of just pimp it out.
Do you? Okay, yeah. No, that's awesome. That's awesome. I remember you
Yeah.
talking about that a while ago, and I love Sanctum. I feel like
Same.
liquid staking tokens are like the coolest thing ever, and I've always loved them. So it's like the fact that they're getting this much traction and we're seeing all the cool things that you can do with them is great. So I'm excited to see that come out. I think they might be the reason that I have to pay a lot of cap gains tax this year, because I farmed their airdrops
fair
super
few people,
hard.
man.
Man,
the Wonderland definitely reset some cost basis for Solana for people.
Yeah, all my staked Sol, I basically swapped to liquid staking tokens and swapped between them a couple times to get the right ones, and my cost basis is a lot higher than it used to be. So yeah, we'll see. I was one thing I was thinking about, I was like, all right, whatever the cap gains that I got from farming the Sanctum airdrop, I need to be able to write those off. But I don't think you can do that.
No, that's gonna be tough.
It's not how it works.
Yeah.
Yeah, that sounds good. Let's see. Any prediction for when this cycle tops at all?
Oh man, I'd be the wrong person to ask. If anybody listens to my opinion on that, they're probably gonna get wrecked.
I know, but I feel like you have you get to kind of see, you know, you get to see it from like you're in the market, but you see a lot more of like what's going on. So I feel like you might have some sort of insight.
Yeah, man. I don't know. Like for me personally, I'm third cycler. You know, they usually say first cycle you round trip, second cycle you take profit too early, and third cycle, you know, you make it. But I'm pretty sure I round tripped a little bit less hard, and this is probably the cycle where I'm going to take profit too early. So I think anybody in their first or second cycle is going to just see me as a boomer, because I've already started taking a little bit off the table. I won't take all of my chips off the table, because if we are, you know, in some like hyper Bitcoinization super cycle, I want to make sure that I, you know, have some exposure to it. But I don't know, man. I really think that the 25 could be a good year.
Yeah.
I think a lot of people saying that, you know, things are going to top in October means that it'll probably top, you know, Q1, Q2 of 25. And just looking at the macro, I think end of 25, 26, we're going to hit probably some really brutal market conditions on the macro level. And so, personally, I don't want to have too much risk on at that point, but I think until then, it's risk on, baby.
Yeah, I feel the same way. I mean, especially for right now, it's like, you know, we just got Trump in as a president. He's talking about crypto every day. Like, Doge is in the news just like every day. They're talking about it. There's a government agency named Doge. It just seems like I have a hard time selling right now. Like, I've taken some profit, obviously, but it doesn't seem like it's going to end. Like, things get a little frothy, but I mean, I think things can get a lot frothier than they are now, right?
Yeah. I think I'm lucky to be in a position where I don't need to be greedy when it comes to like my crypto profit. So I think I'll be taking profit early and just happy that profit's profit. And, you know, ideally, because, you know, I've been around for a while, so I think ideally I would just like to keep some of my tokens. But for the most part, the way that I see it is just like converting it into things that improve life. Money in the bank account to have a buffer, you know, roof over the head, that type of stuff, I think is kind of where I'll be focusing, and I'll just be happy that, you know, the profits that I've been able to take support those things.
Oh yeah, no, That sounds great. I
Yeah.
plan on doing the same. I find myself like wanting to just like lower the risk just like a little bit, like get it a little bit more into the Bitcoin, a little less into the meme coins type style.
Yeah.
Um, one thing I got to bring up, it's probably dumb, but like I feel like Elon Musk and Trump have talked a lot about just like getting rid of all income taxes and just having like a flat fee for taxes. Like, is that like even in the realm of possibility of happening? It seems like that it seems pretty crazy. Like it sounds great, but I don't think that's ever going to really happen. What are your thoughts on that?
Yeah, I mean, it has to. It can't be done unilaterally. You know, it's
Yeah.
like multiple levels of government have to agree that that's the way forward. And
Yeah.
you know, the thing is, like right now, every branch of government is Republican in the U.S., so it's probably a little bit easier for them to get things through that they think are a good idea. Um, but yeah, it's not going to be something that happens soon.
Yeah.
It would
Yeah.
take a while. Um, you know, I know a lot of people are thinking, oh, I'm just gonna, you know, Trump's gonna be in, I'm gonna sell in 2025. There won't be income or capital gains tax, and they think that's the hack where they're
Yeah.
not going to end up paying any taxes. But I think that's going to end up biting a fair few
Yeah.
people when they realize that that's just not realistic at this point in time, and it's going to
Yeah.
take a while for that to actually come to fruition if it ever does.
Yeah. That even if that does happen, I mean, it's such like a small percentage. You're better off like being prepared, right?
Yeah, yeah, it's kind of
So
the off chance. Um,
yeah.
I've actually got to start heading soon.
You do? Okay,
So
sounds
yeah,
good. Well,
yeah,
no, I appreciate the time here.
no worries, man.
I've learned a ton, and I'm sure, at least I hope that the listeners have been taking a ton of notes, because I think this is like a really essential part of like the whole crypto experience. So really appreciate the time. Really appreciate the service that you guys do. I give you guys, you know, the highest recommendation. If you guys have any questions, you know, feel free to reach out. And why don't you let the people know where to find you, and go from there.
Yeah, best place to find us is on Twitter, I'd say, or X now. We are Crypto Tax Sucks is the handle, and Crypto Tax Made Easy is the business. If you're interested in getting a quote from us, cryptotaxmadeeasy.com/contact will take you to our quote request form. We can give you a custom quote for processing your account and just a breakdown of our service offerings.
Sounds good. Sounds good. And I highly recommend the X account as well. He gives out great threads. And you can learn a ton from there. But thanks again for the time. Really appreciate it, Matt.
Yeah, my pleasure. Thanks for having me, Tom.
All right, man. Talk to you later.
Later, buddy.
All right. Thank you guys so much for tuning in to Solana Weekly. Once again, this is Thomas Bahamas, and I have one final ask for you guys. If you could, please subscribe on whatever player you're listening to. You could leave a review. That would be amazing. If you want to shill me your bags, work for them. But yeah, really appreciate it. And as always, this is not financial advice, but I want you guys to acceleration forward and let's get this bag. I'll catch you guys next.